Hey, we're live. It's May 16th, 2024. I'm Shane Ogle, along with my partner Richard Hodges, and we are the Rogue Traders, and you are watching Deribit live. And actually live, prices moving around a little bit right now, actually, as we've been getting ready for the call. And we've had a bit of movement. I think that over the last couple weeks, maybe people are sick of movement, but here it is. We're back. So, that's going to give us some things to talk about, and it's very relevant. So when on Monday, I thought, okay, what should we talk about this week? I thought, you know what? This is what I'm doing in my own trading. And the subject here, I'll just go to the next slide. The subject today is Bitcoin stays range bound. Let's profit without getting blown up, because, man, there's been some big liquidations. That big move that went down to 57, the move back up to 65, back down. And yesterday, another big move up and a lot of liquidations. If you've been hodling through the whole thing, you're like, it's nothing. Yeah, it's just Bitcoin, right? But if you're trying to trade it, it's been a little tough. So we'll definitely talk about that. Richard, you have a bit of a cold today.
Yeah, I do. So I'll speak less than normal, which I'm sure people will be relieved about.
No, we love it when you talk. I noticed on the news last night, New Caledonia is in a big uprising, and the French are sending people there to quell some riots. Have you ever been down to that area of the world, like Solomon Islands and?
No, I don't even know where New Caledonia is.
Yeah, it's a South Pacific, like just east of Australia. Yeah.
So the natives are revolting.
They are indeed. Well, or at least the one political party is, or something. But I've never been down there. I've always wanted to go to those areas and never been. So I keep seeing these little things pop up in the news feed. So
okay,
I don't think we have anybody on our call from New Caledonia. If we do, please let us know. All right. So without further ado, let's get started today.
South of Vanuatu. I was looking at Vanuatu the other day for some other reason.
Perhaps a holiday, or
there was some news report about Vanuatu, and I knew nothing about this country.
Yeah. Not to be confused with the 1970s ABBA song, Xanadu. Okay. All right, let me just carry on. Synth miner account is cooking along. Started at 11 weeks ago to the day. We started off with 0.0825 of a Bitcoin. We're now at 0.1065 up from last week. Our equity is up 0.10 to 0.1030, again up from last week. And we've increased our Bitcoin in 11 weeks by about 25%. Starting cash, now we're just over 7K. We started off with 5,500. So that's great. That's US dollar value. And the US dollar synthetic mining annualized return is about 260% versus hodling, your US dollar hodling, you'd be up 24%.
Annualized basis, yeah.
Annualized basis, yeah. So if we want to take a quick look at that, what that looks like on a chart, hey, it's looking pretty good. This is our Bitcoin return. Again, the red line is always going to be flat because you're hodling. We bought Bitcoin the exact same day. One strategy is just going to hold the damn thing and hope it just keeps going up. Other one is we're going to try and add to it. And here's the US dollar value right here, our US dollar return with the synth miner. So it's all looking pretty good. And we did do a big boo-boo on that big crash down. We end up selling some calls to try and offset delta and got hosed on it. So now we had a 5-week program to make that all back up. It's all looking pretty good, but we can get into that synth miner. And of course, if you want to follow us on these things, you can check out the offer there. If you want to hang out with us and do monthly private coaching calls, check out our gold program as a free consultation call. If you want to book a call with me and we can chat if you're ready for something like that or not. Or if you just want to watch us live streaming, go to patreon.com, Rogue Trader Academy, or check out roguetrader.academy if you want to hang out and join our live alerts and, just hang out with us if you're so inclined. All right, so let me just actually stop the slides, and what I'm going to do.
I was going to say that you see that we're down off our highs, and that's all been about mismanaging the sell-off in Bitcoin. We should have just left things alone.
We should have just left things alone. How many times in our trading careers have we said, damn, I should have just left it alone?
About 80% of the time. Yeah.
Probably about 80% of the time. But you never know at the time, because there's those will be those times they'll just keep going. And you're like,
well, I
wish I would have managed that.
We were afraid of appearing in front of the whole world going, yeah, screw it, we don't care. We're going to roll these puts and then see Bitcoin half in value. You know?
Yeah. We're the rogue traders, not the complacent traders. Right? All right. What was I going to do? Oh, yes, I was going to share my my charts. All right. Let's see here. This should be it here. Yes, indeed. Yes, indeed. Here's our silly charts. Again, called silly charts because I do almost no technical analysis. I mostly just do support and resistance. Now, I did draw a few lines in here. Okay, fine. This is an hourly chart. Look, I ended up drawing a line. This is a downtrend. So a trend stays at a downtrend until the previous high is broken. So here's a high. Here's a high. Bounced up. Here's a high. Bounced up. It did not. I mean, this could argue it broke the trend here, and it might be a valid argument. But I said, you know what? Let's just say this is a downtrend. We've come to the wedge of the point, which was the day before yesterday. I said it's going to bust. It's going to bust out one way or the other. It's going to either head down or we're going to go up. You can't get to the point here, and it's not going to do nothing. It's impossible. So here we are. Now, I did some basic support and resistance, just seeing where there was previous support and previous resistance. That's kind of this big box area. What a coinkydink. Went right up to the top of the box and stopped. Now, it's holding tight. I mean, Bitcoin right now, 66,260, it just pulled back a couple $100. If it breaks up above here, I would expect it to at least get up to about 69, maybe 68.5, 69. Up to a range of about 71. I'd expect it to get stuck, get sticky up here. I think Richard's going to talk a little bit about this in terms of a correlation with the S&P later, but that's fine. I think that right now we've got some actually maybe too a little reminder, Richard, if we could take a look at the ETF inflows later when you get a chance. So let's do that later. But when I look at this too, a lot of times people will say, well, what about this? What about that? Where's it going to go from here? If the S&P crashes, this thing's going to go with it. If the S&P rips, this thing's going to go with it. If the S&P just stays kind of neutralist and this thing moves around on its own, sometimes I'll look at some other indicators. I might look at high volume area, so I'll basically say, all right, where is the point of control? The point of control is right around 63. I don't expect it to stop there, but things revolve around those high volume area points of control. I don't leave those on the charts because they get things messy. I'll pop out to a daily chart. That doesn't make any sense looking like that now, does it, right? So what I'll do, give me here, we'll look on a daily chart, and I'll throw on some basic EMAs. The 20, 50, 100, and the 200. And I find these are very, very reliable. And as you'd expect, that last big move down, that slow moving ETA, that 100 day, it's right at the bottom of that range, right? So I don't like to leave these on all the time. I find things get a bit messy, and I find that they're not really necessary. I like to just use basic support and resistance when I'm trading options. Now, if I'm scalping this, I might add different things in. But I think that, the chart is pretty clear to me where I think we're more likely to go. So I like this trade. Someone asked me about 3 hours ago, we're going up or down from here? I don't know. It's sure holding up pretty good. It sure wants to make a try at it, it seems. I think it might just depend on what happens when the U.S. opens up. Again, if it goes up, I fully expect it to get to very close to 69, if not punch through it. Might not happen. We could just get a little wick up and back down, and it might fart around here. If it drops back down, I would expect around 63. I wouldn't expect a big plummet down to 61 unless there's some type of a catalyst for it. So that's what we're doing here. And I think that, what we'll do is we'll go rich, but then we'll segue off these charts into the topic today, which is to not get your face smashed in. Basically, we're in a range, but we're starting to get into some thin ice. the longer a channel or a range goes, the bigger the chance. And we can see the volatility coming back. We've seen some big moves. I mean, what is this? I bet you that's probably 8-9% from here. Yeah, I mean, we're talking 8.5%, almost 9%. That's a big move. That's a big move. And as we've said many times, Bitcoin will average that every 90 days, about a 10% move or more. But we've had a lot of these crazy moves. And I know it's really hurt a lot of people. It's made a lot of people very gun shy as well to get in. So we're going to trade this really, really delicately. And I think that the way I approach this is, if we're sitting right here in the middle of the range, could I do something like sell an iron condor, put some short strikes up here in the 70s, some short strikes down here in the low 60s, and cover it off? Yeah, I could. Vol's not bad. It's about 58 right now. It could easily go up. It could easily go down. I wouldn't be surprised if it goes down as we're coming into summer. But I would rather put on components of an iron condor or spreads separately. So if we get something like, this thing moves up to 70,000, 71,000, I'm happy to put on a spread above the highs, betting that it won't break that high. If it breaks that high, I'll manage it. No problem. But I don't want to put it on now. Same thing. We go down, and we're back down here. I'm perfectly happy to put on a spread right down here. If it goes down, I'll put a spread. It goes up, I'll put another spread. I'll build those iron condos out as separate spreads that way. I think that's the way I want to do it. So this trend, for all we know, this trend could go till September. It might stay in this channel. I don't think so, but it might. All I can say right now is it's getting a bit wiggy. And by that, I mean, we've started to get some monster moves for various reasons. I mean, these are massive moves we've seen over the last month. And I'm a little bit concerned that the range is going to get tested. So I don't want to put on a spread too early. I'd rather wait till we get the premium jump juicy, and I can sell that spread in behind resistance or in behind support. That's how I want to play this. I'm happy to earn less theta. There's a time to make money, and there's a time to back it off. I think right now is time to back it off, and maybe even we've talked about this on previous episodes. Maybe start looking at getting some long gamma. Let's maybe put on some long spreads, even if we want to do them as 1x2s, and we've talked about that many times. I think we might be getting to the time. Again, summer, we could end up just if all collapses and we're better off just to go on holidays. Could happen, but I wouldn't be surprised if we had a breakout before summer, then settle into a range during summer. Whether that's higher or lower, I have no idea. But that's how I'm kind of looking at it, Richard. Any thoughts on trading this crazy moves here we've had in this channel?
Yeah, I kind of agree with you. I'm less inclined to replace shorts that come off at the moment. I just don't want to be loaded up. If I can share my screen, I don't know do you have to unshare yours first? And then
I'll turn it off. Yeah.
There we go. So the ETFs are interesting. Yes, the 15th, so 2 days ago, the latest figures we've got, plus almost 5,000 bitcoins, which is 10x of the mining supply. Went into ETFs on that rally from 62 to 64. Difficult to know whether that's program buying now from funds or whether that's reactive buying as a result. Seeing the S&P move and then wanting to pile into Bitcoin to get a leveraged play on that. And I do kind of see Bitcoin as a leveraged weather vane for the S&P at the moment. Kind of the S&P and interest rates, which is the same thing. And then interestingly, Hong Kong had its first good day in a while. I mean, not majorly good, but not bad. So I'm not quite sure what to think, because yesterday's move was enormous, and it was enormous on S&P, and every single market went up, except the value of dollars. Right? Even pound sterling went up against dollars. On the basis of this report on inflation, which to me didn't seem that great, but the market took as amazingly good, and therefore, we're going to get into interest rate cuts. I kind of feel as if that's a bit of a short-term reaction, and I wonder how much of that move up in markets was due to short covering because people were positioning for worse numbers. And I also wonder how much of that was responsible for that in Bitcoin too.
It did seem like an overreaction, didn't it? Like, it's like, really? This is the news you're going up on? 8%? Come on.
Yeah. Yeah, S&P went up like 1% yesterday.
Yeah.
On numbers that are basically saying that people are surviving but not comfortably. So yeah.
I see the futures are all fairly flat, and things are looking slightly positive right now. We'll see what happens when it opens, but
yeah. I actually. Let me quickly have a quick look.
And I'll just, while Richard's looking, I'll just remind everyone, if you have any questions, please drop them into the Q&A section, and we'll cover that, any questions at the end of the call in about 5 or 10 minutes.
Yeah, everything's sort of, it was trading up overnight and then sort of gradually giving up gains, isn't it? I mean, that doesn't mean very much.
No. I see the VIX is still, 12.4 or something.
Yeah. One thing I did wonder was whether what we're seeing is the sort of last gasp of optimism in the market before it all goes quiet for summer. Maybe people were thinking, we'll make a quick buck being short the market, on a bad report, and then get out and go on holiday, and then all that went wrong.
Yeah.
So it's quite possible that the market's too expensive. I'm certain that the S&P is too expensive. I think the average P ratio is like 45, weighted average, which means that if you buy the S&P, your stocks are producing 2% of their value in earnings. So you get better money putting it in the bank.
At some point, and I guess we could look at articles for the last year saying, it can't go much further. It's got to be a crash or a pullback. That's how these things go, right?
Yeah, I mean, we've lived through tech booms and .com bubbles, so we know it can certainly go further. We could have S&P at 10,000, and people will justify it to themselves that it's perfectly normal and right.
Yeah.
But I can't help feeling that the market was looking for an excuse for bad news. It didn't get bad news, and so it reacted up, rather than looking for an excuse for good news and buying anything that was good news. Yeah, that's my gut feeling.
That's your gut feeling. Hey, why don't I jump over and take a look at the Synth Miner account? We did some trading on there yesterday. I might have made a trade in there last night. I might have adjusted some calls, but
yeah, you rolled something. So we've got these problematic 2 lots of calls that were protection, which are now liability, which you rolled out to the next week, 24th.
Yeah, they were the 17th expiry, I think, right?
Yeah. Yes, they were. Excuse me. And you bought back the shorts and then left the longs in. Fair enough, because they're worthless. And you sold a little bit of overnight to get 18th. Some premium in, and you've sold the bulk of it over on the 24th of May.
Yeah,
69K.
And for anybody wondering why I split it up like that is whenever I roll something, whether it's a week or a month, using crypto, I'm not rolling a month away, is even if I'm doing it as a credit, I feel crap that I didn't realize that value now. So if I can roll something up or down, if it's call or a put, in the same expiry, even just a portion of it, 10, 20, 30% of it, I will. Or maybe the next day, I will. And then put the bulk of it further dated so that I'm not, putting all my chips on black on the 24th. Like I'm able to spread it up a little bit. And I might do that. In this case, calls, just to calls. Sometimes I'll strangle it out, whatever. But I tend to smear that out a little bit over strikes and expiries. It really depends on the context of what's happening in the market at the time.
And so that leaves us in terms of positioning. We are way too short calls for this strategy, but also and we're not short enough puts. No, we've got we've got the right amount of puts,
We do.
the right quantity, but our puts are now a little bit far from the money. So actually, we're just waiting for those 56Ks to get bought back at sort of sub 10 pips. And then I guess we're going to go back in and sell 60, 61, something like that. At the moment, 8 days to run. So if we were opening a position here by rights, we'd probably do the 63 at 106 and buy cover at sort of 57.
And 63 feels a bit dangerous right now after the way the market's acted. That's another reason here too, is I did not roll anything off to puts because I just didn't see any value in it. I figured we couldn't jump out of the frying pan and into the fire, so I'd rather just keep rolling them up for now, and then we can always adjust later.
If we get a nice $1,000 sell off, I'd be happy then to push out some 62K puts, maybe even buy some calls back and get back to business as normal.
Agreed.
But we've got this nagging fear, right? That there's always this fear that the market's going to run away with us and go up, and that's probably historically unjustified. But you can never get away from that fear because the upside is unlimited. But I've also got this concern that if I get sucked in, and I write puts now, I could end up regretting that really badly in 2 or 3 weeks' time when the market's in a whole different mindset.
Yeah, it's always nice to feel like you got a good value, even if it goes against you. It's like, okay, you know what? I sold those for a decent price at the time, versus desperately selling some puts as things are ripping up and you get nothing for them. The market makes a small reversal and you're down 50% on them. And it's like, oh my gosh, what a waste of my time that was. So, but the right thing to do in a rising market is to just keep selling puts. But you don't know if it's going to continue to be a rising market. I mean, that's been the strategy in the S&P. You just keep writing puts and they just keep paying you. Eventually that's not going to work, but it's interesting. So, and right now we've got, 66,200 is the price roughly. And man, it's really stuck here since last night. It's just been pinned and it's kind of, moving around at a $500-$600 range.
It feels to me like we got nudged out of a gamma trap in the market, and then just like we're now locked into another one. So 62 was a sort of a gamma wall. Then we got nudged to 64, and now we've been pushed into 66. And in the absence of any other news and shocks, we'll just go and expire at 66, and then the market makers will unwind. In which case, I would expect probably prices to come down a bit.
Yeah, we've got the weekly expiry tomorrow, and we could see. Well, they could pin it here until then, but we could see a little bit of movement.
I mean, anyone who was long Friday calls is going to want to lock in profits at some point, and then that will result in some de-hedging.
Yeah, we'll see. Well, the U.S. is going to be open here pretty quick, so I would expect maybe a little bit of movement. All right. Well, is that it for the Synth Miner account? I think we're pretty happy. It just keeps growing and growing, and we're, despite having a bit of a snafu a few weeks ago, we're slowly recovering that.
Yeah, I think we just need to get back on track and get it more put skew. Well, give it a few days for those positions to come off, and then we'll get back to normal.
Yeah, and get back to the businesses selling mostly puts.
Yep.
All right. Hey, we have a few questions. We've got 5 minutes left. A question from Peter. He asks, why not be fully hedged with dated monthly, quarterly futures, basis trade, and add the option plays on this? Yeah, great question.
It's a great question, because then our returns would be in dollars or synthetic dollars rather than bitcoins, and we're looking to mine bitcoins here. So. But I agree with you. If you want to make dollars, selling futures and buying the underlying is a great trade, and you could probably do it in 2 or 3x leverage, and still make money most of the time. Another nice trade is to sell perps and buy underlying, and then just sit and wait, because whenever the market gets scared, the perp funding gets really, really expensive.
They can make some good dough that way for sure. Question from Raul. Hello, before yesterday's price increase, Bitcoin had been trading between 16.5 and 63K for a week.
Yeah.
In the last days, devol has increased from around 50 to 60. Could you please explain what the inputs are for devol to increase even as Bitcoin price is kind of range bound?
So the only thing that drives vol is behavior of market participants. So clearly people were doing pretty much as we've been saying, which is getting uncomfortable by being short the market, and so buying their shorts back or getting a little bit long. And if they start buying options, then that means that prices are going to options are going to get forced up, so the implied vol goes up. We actually saw half an hour of vol increase half an hour before the CPI announcement yesterday. I think the numbers got released early, so someone clearly had early access and had marked up prices accordingly to pick up that move. I saw that on my immersive finance chart, and but yeah, the vols in moves in devol are all down to moves in implied vols in the option prices, and those are pretty much all down to market participant behavior, except when market makers may take account of some data that they've got and adjust their models, and then they mark up their prices accordingly. But they'll be careful about doing that, because if they cross the market, if their model might be right, but they may not have the balance sheet to take on the 1,000 bitcoins of risk that they are going to take on if they market differently to everybody else. So they'll just bias it.
Yeah, and Peter just made a little comment here. Yes, you're right, Peter. I forgot about that. In about 2 minutes, we've got unemployment claims in the U.S. coming out, and that could definitely cause a bit of a stir. We'll see what happens.
It's going to be all lies, though. So it doesn't matter.
Of course, it's all lies, but just how big is the lie will really be the question.
I was asked on LinkedIn 2 days ago about my view of these reports coming out, the CPI and stuff, and I said, look, to me, the numbers are all so fiddled that to me these events are just sources of volatility, and they mean nothing. The recent one on the CPI, I think did I mention on the last call or one of our calls that coffee's up 72% this year, and just by coincidence that they announced they're going to remove coffee prices from the CPI measure.
Surely it's a coincidence.
I mean, and everyone drinks coffee, right? There's no one who doesn't drink coffee. It goes into the prices of stuff at McDonald's, everything. And I saw yesterday news that McDonald's are even going to produce a Happy Meal at $5 to take a loss on it, just to convince their customers that they're still cheap.
The original $5 Happy Meal. Yeah.
Well, I mean, when I was a kid, it was like $1, but and now a normal meal at McDonald's costs you about $20, which is the same as more than eating a menu of the day in any restaurant in Spain. I go to.
It's funny. I saw a video the other day. I just happened to see it in maybe it was on X or something, and it showed someone opening a McDonald's burger, and they showed the patty, and it was razor. It was as thin as the pickles. I'd never seen that, and I thought, hang on, is this? I didn't know. Maybe it was
they're 40% smaller than they were in the 80s.
Wow, where's the beef? Speaking of the 80s, right? You know what I'm talking about, right?
No, I never do.
It was a famous advertisement. I think it was Wendy's hamburgers or something. This old lady, where's the beef?
That's right.
Yeah. A little bit of 80s trivia nostalgia for everyone today. So we got this number coming out right now. So let's just
Bitcoin's on a rip.
We'll see. Yeah, it's about to break its recent highs.
Yeah, 66,700 now.
Yeah. Okay. Well, we don't have to sit on the call. I mean, we can
all watch the screen with full on hope.
We can just chat. Well, if we have no more questions, we can end it here. So if you have any last questions, please drop them in. We're at the bottom of the hour, so we can spare another minute or two. But
we're down again now. That's weird.
It poked its head up because
and then sold off. That's
$500 move it just made. I mean, that's I expect that when a number comes out. I mean, I don't think it's anything
Yeah, I guess so. Yeah.
extraordinary, but still holding. It's still pinned up here in the range. So we'll see what happens. Well, I think that's a wrap for today. If we've got no more questions, not a lot about to talk about, or a lot to talk about in terms of a big trending market or big exaggerated macro moves. We're still stuck in this damn channel, but it's getting a little bit dicey, a little bit precarious as far as I'm concerned as we're coming into the summer session. So let's see what happens this week. I gave my thoughts on where I think we're going to go. We'll see if I'm completely wrong on that or not. Other than that,
I was just going to say, I just had this message through from my partner in the market making business. The market maker loved that $500 move. Just ripped through a bunch of strikes.
Yeah, it probably triggered some sell orders.
Yeah, it was very nice. Yeah,
or they sold. They triggered some buy orders that are placed above there and balance out those inventories. All right. Anything else, Richard?
No, I think a bit of a boring show, but I think the markets are pretty boring at the moment. They're moving around, but they're not exciting.
Don't push it.
Yeah, so we're very much going to reduce the amount of risk we sell over the summer and we'll accept lower income. And we're happy to do that because we just don't want a problem to manage while we're on the beach.
Yeah, and there's other assets to trade. There's FX, there's futures. There'll always be something going on, so we can make up for it by kind of diversifying across some different assets. So fantastic. All right, that's a wrap. Hey, thanks everyone for joining us. We'll see you again next Thursday at 12 GMT.